TV18.
Well, hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening.
Given the uncertainties, we need to maintain Arjuna's eye on the evolving inflation scenario.
RBI Governor says the goal is to bring inflation down to 4% as the Monetary Policy Committee announces a status quo policy, maintains the stance at withdrawal of accommodation. The unexpectedly hawkish policy effectively pours cold water on rate cut hopes this year. About 50% of the 2,000 rupee notes in circulation have been returned to banks, says the RBI Governor. This amounts to 1.8 lakh crore rupees. Around 85% of these notes returned in the form of deposits. Financial stocks slide after RBI status quo policy. Sensex and Nifty declined 0.5%, snapping a 4-day winning streak. 10-year bond yields spike, reaching 7%. The government is likely to nudge oil marketing companies to cut fuel prices as they are close to normalcy on under-recoveries. Sources tell CNBC-TV18 that oil marketing companies can pass on some benefits to consumers within the bounds of legitimacy. In his first interview since taking charge, Hero Motor CEO Niranjan Gupta says that the board wants him to shift gears and win in new segments like premium bikes and electric vehicles. Adds that recent VRS scheme will enable a talent refresh.
We being the leading steel company in India, we just to keep our market share, we at least will have to double our growth, double our capacity from today.
JSW Group boss Sachin Jindal says that they are looking to almost double their steel capacity to 50 million tons by 2030. Jindal tells CNBC-TV18 that the government has projected need for 250 million tons in the next 7 years. Adds that JSW, as the leading steel maker, will have to double growth to keep their market share. JSW Steel stock spikes over 4% in trade. The Met Department confirms the onset of monsoons over Kerala, declares an orange alert in Kozhikode and a yellow alert in several districts. Heavy rainfall reported across different weather stations in the state. Record-breaking apocalyptic smog over New York. Smoke from Canadian forest wildfires shroud the American city. Cities along the East Coast in the United States issue air quality alerts. New York mayor urges residents to stay indoors. Thousands evacuate their homes in Canada. Football icon Lionel Messi picks United States over Saudi Arabia, set to join David Beckham's Major League Soccer side Inter Miami. Financial details yet to be disclosed, but Messi is likely to share profits from the American League's deals with Adidas and Apple. Well, here's the big story this evening. The Reserve Bank's Monetary Policy Committee announced a status quo policy in what was a largely expected move. But what was unexpected was the hawkish tone on inflation. Now, before we get to that, here are the key highlights. The MPC unanimously decided to keep the repo rate unchanged at 6.5%. It maintained the stance on withdrawal of accommodation, with 5 members in agreement and only Jayanti Verma casting a dissenting vote. Citing robust domestic demand, the RBI maintained its growth forecast for FY24 at 6.5%. It raised the growth forecast for Q1 to 8% and Q2 to 6.5%. Meanwhile, the estimate for FY24 inflation has been lowered to 5.1%. Governor Das said that inflation remains within the target range. He asserted that there will be no compromise on the 4% target. And finally, the governor also said that about 50% of the 2,000 rupee notes have returned to the banking system so far. This amounts to 1.8 lakh crore rupees. Around 85% of these notes have returned in the form of deposits, providing an additional liquidity cushion for the banks.
Given the uncertainties, we need to maintain Arjuna's eye on the evolving inflation scenario. Let me re-emphasize that headline inflation still remains above the target, and being within the tolerance band is not enough. Our goal is to achieve the target of 4% going forward. As Mahatma Gandhi had said, the ideal must not be lowered. The continuation of stance of withdrawal of accommodation should be seen from this perspective.
Totally so far, about 1,80,000 crores, 1.8 lakh crores of 2,000 rupee notes have come back. And this is roughly about 50% of the 2,000 notes which were in circulation on 31st March. About 85% of the 2,000 rupee notes are coming back as deposits into bank accounts. Going forward, I would, through you, appeal to everyone not to rush or not to go to the bank in a panic.
I would call it an unexpected hawkish pause. Other things are expected. The rate was not expected to be changed. Pause continued as expected. As well, the very wording of the stance has not been changed. That's what our poll showed. But there were minor hopes here and there that the stance would be withdrawal of accommodation, but some softening. No, there is no scope at all. In fact, they have actually been hawkish. And I'll tell you 2 or 3 reasons why I think it is a hawkish policy. One, almost everyone expected that the inflation forecast would be revised down to either 5%. That was the conservatives. And the Dove saying it could be 4.9 or 4.8. Lo and behold, it is 5.1. Not even come to 5, which means the first quarter, the inflation forecast clearly has come under RBI's expectation by 50 basis points. They've just arithmetically removed that and given you. They have not assumed that the momentum of slower inflation will go on to the second half, which is what many people assumed. And the fact that they haven't assumed that clearly makes this a hawkish pause. The other point is the repeated insistence that we are not done if we just come to 6%, because the target for CPI is 4% plus or minus 2%. Coming under 6, you are within the target, was how the market was interpreting. By saying it, I think about half a dozen times that you have to, we want to be CPI to be aligned to the target of 4% was very clearly a very, very hawkish stance from the Reserve Bank governor. And even on liquidity, there have been instances when rates have been, when yields are falling in the bond market and banks dropped yields or dropped lending and deposit rates just by 5 basis points or something. Reserve Bank just swooped and sucked out all the liquidity, which is coming in probably because of the 2,000 rupee notes in part. So the fact that, and they said it, what will be your response when banks cut? You saw our liquidity response was the answer, which means we won't tolerate yields or rate softening. So I would therefore say it is hawkish. There was just one line which I would say is dovish, where when asked, are you not going to change till inflation gets to 4%? The answer was, we want CPI to be aligned to 4%, not at 4%. So that was a bit of a giveaway, which means they may probably change their stance before you get to 4. Beyond that, this was hawkish and how.
Well, you can catch our coverage on the RBI monetary policy at 5:30 p.m. with India's top bankers, economists and bond market experts right here on CNBC-TV18. Well, meanwhile, the market failed to hold intraday recovery to snap its 4-day winning streak. Nifty and sensex fell 0.5%. Mid-caps fell in line with the blue chips. However, financials underperformed after RBI's status quo policy. Prashant Nair is here with a quick wrap of the day's market action. Prashant.
A little bit of profit taking after what has been a breathless run, a dash to all-time highs. So not quite making it and halting before that. And today we saw about a 100-odd point cut. Actually, the market started fine. Starting about 11 o'clock, you had the first cut. And then starting 2 o'clock, you had another decline, which took us on the Nifty at least to the day's lowest point. But the cut is less than 0.5%, mind you. Bank Nifty lost a little bit more, but not by much. Let's just start with the losses on the Nifty. So Kotak was a large influence on the downside. There was also names like Grasim, Sun Pharma, Tata Consumer and Tech Mahindra which came under selling pressure. Mid-caps and small-cap indices, small caps especially, has been the star of the last so many days now. And there was about a 1% pullback that we had. So let me just detail the losers out for you. Suzlon saw a pullback. Most of these had done quite a bit on the upside. IEX was news-related, and most of the sell-off came in the last hour of trade. But Varun Beverages, Indian Hotels, HBL Power, Colte Patil, Nucleus, Newland, Westlife, these are pullbacks after very sharp up moves. Oil marketing companies were also lower after our story. HPCL, a case in point. Now, in the broader space, there were gainers as well. By the way, the list of volume-led gainers was still far longer as compared to volume-led losers, and that is heartening to see even on a day like today. Paytm, Dixon, JBM Auto, Car Trade, these last two names have been doing very well recently. HEG, Gati and Snowman Logistics were some of the other gainers. On the Nifty, support comes in a little lower from where we left off today at about 18,531. Not very much by way of data today, only the Fed meeting next week. And in the US, I think what will be watched is the rally which has been broadening out there, if that continues or not. Back to you.
Well, the government expects oil marketing companies to reduce fuel prices. Sources tell us that the expectations come on the back of health of OMCs being close to normalcy on under-recoveries. Now, all the companies like HPCL booked a net loss of almost 9,000 crore rupees in FY23. Sapna Das joins us now with more details. Sapna, tell us, what are you picking up?
Well, government sources are of the view that oil marketing companies, their financial health is slowly inching back to normalcy, or they are close to normalcy. It could just be possible that most of the petrol and diesel under recoveries, that situation may not be there completely, so to speak. Of course, some bit will always remain, but there could be some scope within legitimate bounds for them to pass on some benefit to the common man, to the common consumer. The government's aim always, of course, has been to maintain stable fuel prices, with a downward trend. So this could be a kind of a soft nudge to OMCs to explore the possibility of a fuel price cut. From the OMC's perspective, I think a couple of things that we need to keep in mind. FY23 was a rough year for them, though of course government sources expect the ongoing current quarter also to be a good one on the back of a good Q4. So some of the companies are still not out of the woods. HPCL reported a net loss in FY23, so that could be one factor to keep in mind. Apart from that, importantly, the rupee-dollar exchange rate and the Saudi announcement of a production cut. These two factors are going to be important as far as pricing decisions are concerned. There is no response yet from the OMCs on this front, so I think we have to keep an eye out on that. But the government, in the meanwhile, from its end, their messaging is quite unequivocal at this point in time.
Well, speaking of fuel price cuts, brokerage firm Morgan Stanley said that oil marketing companies are on track to recover their losses, and current fuel prices can offer a buffer of 2 to 5% price cut. Well, moving ahead now, the Indian Met Department has confirmed that Kerala has received its first spell of rain after a week of delay. Earlier, the IMD predicted that cyclone Biparjoy had affected the monsoon's intensity and that the onset over Kerala would be mild. A yellow alert has been issued in parts of Kerala coast. Well, on to the newsmaker of the day. In his first interview since taking charge, Hero Motor CEO Niranjan Gupta has said that the board expects him to shift gears and focus on performance of new segments like premium bikes and electric vehicles. In a conversation with Parikshit Luthra, Gupta said that 10% of their employees have taken voluntary retirement. He added that every company needs to go through a talent churn to make space for the future.
From time to time, every company has to go through refreshing, talent churn, in order to ensure that the talent is future ready and future fit. Overall, around 10% of the staff took the VRS, and that paves the way for the future in terms of building the organization, much simpler organization, de-layered, simplified, which will ensure that the speed at which we move will be much faster than what we have been doing. Given the framework of EV that's changing rapidly, whether it's in terms of customer, whether it's in terms of regulatory, or the battery side, the cost side, or the FAME that everyone is aware of, I can only say that don't go by the current leadership in the market. it's going to change dramatically over the next 3 years. And typically, we have given the guidance of between 1,000 to 1,500 crores a year. That's the range of capex guidance. So therefore, more and more investment out of this pie will be towards an EV and premium.
Well, you can catch that entire conversation at 5 p.m. right here on CNBC-TV18. Well, from one newsmaker to another, JSW Group boss Sajjan Jindal has said that they are looking to almost double their steel capacity to 50 million tons by 2030. Speaking to CNBC-TV18 from Monte Carlo, Jindal said that the government has projected need for 250 million tons in the next 7 years. He said that JSW, as the leading steelmaker, will have to double growth to keep their market share.
Right now we are at 28 million tons, and our idea is to go over 50 million tons by 2030, which means that we will be increasing our capacity by 40%, if not 50%, or if doubling. At least 40%, that means 23 million tons capacity we will be adding. The thumb rule in steel industry is that for every million tons, you have to invest at least $1 billion, if not more. So therefore, we are talking about close to $25 billion in the next 7 years.
Well, MG Motor India has said that it has received an order for 500 ZS electric sports utility vehicles from ride-hailing service Blue Smart. The car offers a range of over 450 kilometers in a single charge, which Blue Smart plans to make available for last-mile mobility. Well, with that, it's time now to head into a very short break. But coming up, record-breaking apocalyptic smog over New York. Smoke from Canadian forest wildfires shroud the American city. Details when we come back. Welcome back. SpiceJet has partnered with FTAI Aviation for fleet revitalization. The airline said that FTAI Aviation will provide up to 20 engines for lease and will reduce maintenance expenses for the airline. The low-cost carrier said that the first few engines will be used to support the reactivation of airlines' aircraft fleet over the next 2 to 3 months. Crisis hit Go First has extended its flight cancellations from the 9th of June to the 12th of June, citing operational reasons. The airline, which had filed for insolvency proceedings, hasn't flown planes since 2nd of May. Go First said that it will issue a full refund to the passengers. More from the aviation space. An Air India ferry flight that was moved from Mumbai to pick up passengers stranded for nearly 2 days in Russia has landed safely in San Francisco. The flight, which took off from Delhi with 216 passengers and 16 crew members, was diverted to Russia after a technical issue with one of its engines. The airline has said that passengers will get a full refund as well as a voucher for future travel on the airline. And with that, it's a wrap on this edition of Business 360. Thanks so much for watching. Stay tuned to CNBC TV18. The news and updates continue on the other side.